Inspiring interviews with today's top landlords. This is the Rental Income Podcast. And now, Dan Lane.
Natasha, you have done something that is very awesome. You have replaced your W-2 income with rental income. What would you say is the secret to making this work?
Well, it takes a lot of planning and knowing your numbers, right? You have to make sure you have cash flow. And as a tax professional, I always look at the tax flow, which is not only front end money, which is your cash flow, but back end money, which is your tax savings.
The tax savings on rental properties is something we probably don't spend enough time talking about on the podcast, but it's been a very big part of how Natasha was able to make this work. So on the podcast today, we're going to talk about her strategy. We'll take a look at her portfolio. We'll go over all of her numbers. And we'll talk specifically about the different tax breaks that she's been taking advantage of. Joining us on the show today from Connecticut is Natasha Verela. We'll take a really quick break to thank our sponsors. We'll come right back and we'll talk to Natasha. It's a lot of work to find a really good rental property. And when you actually find that property, you want to make sure you're working with a lender that can get that loan closed. The lender that I recommend is Chaley Ridge from Ridge Lending Group. She's a nationwide lender, and her specialty is helping investors finance rental properties. She has a ton of loan programs, and she can find something customized to you for your situation. If you want to find out more or you're ready to get started today, just go to ridgelendinggroup.com. That's RIDGE lendinggroup.com, NMLS 42056.
Rental Income Podcast.
Natasha, first of all, congratulations on replacing your W-2 income with rental income. That is a huge accomplishment. Before we get into how you did it, let's take a look at your portfolio. Can you tell us a little bit about your rentals?
Sure. So I have 2 3-families, and then I have a single family, and I have a condo, which was my first residence that I purchased as a primary residence.
So
and converted into my rental as the first step to becoming a landlord.
All right, 2 3-families, a single family, and a condo. And
correct.
The rental income from those 4 properties cover all your living expenses?
Correct.
That is really incredible. And what's your living situation like? Are you married? Do you have kids?
Nope, I am single. Me and my dog, and I live in a rental complex.
Okay, so it's really all on you to make things work. So you're
Correct.
Paying all your bills and doing all this with your rentals. Now, how did you figure out how much money you needed every month? But let me kind of explain what I mean. Is that for me, like my living expenses are basically the same every month, but every once in a while you'll have, maybe something come up, maybe a car repair or some other big expense. So how did you come up with how much money you needed every month, knowing that, things happen in life?
Well, I know things happen in life, and, most of us, we know what our expenses are, right? Our housing, our car note, if you have one. One of the things I did before I left my job was to make sure that everything was in working order, including my car. My insurance was paid up for the year. I did all my doctor's visits, and then I calculated what I needed. And before I left my W-2 job, I made sure I had the income already coming in. So I did not leave and then purchase my properties. I purchased my properties and then left.
Okay, right. Okay. Now, did you have to scale back your lifestyle at all, or are you living pretty comparably to how you lived when you had a W-2?
I am living better.
Really? Okay. I love hearing that. So, tell me, is it just the freedom that because you're not going to a job every day that you have a better lifestyle, or how is your life better?
My life is better. I actually have a better living situation as far as my apartment, the space. I made some adjustments. I moved out of a high cost of living city and just outside of it, not too far in Connecticut. And so, there are days where I'm super busy with my properties, and there are days where nothing happens. It's very ebb and flow.
Right.
Obviously when things happen, like, we've had torrential rains over the last year, and I've had to handle some flooding, but I have insurance for that. So, the most I've had to do is find contractors and handle any kind of unforeseen events through insurance.
So you're actually living in a rental yourself.
Correct.
Why is that? Like, why don't you buy a house to live in, or why are you a renter?
I am a renter for a couple of reasons. The tax benefits of not living in your unit are extremely great. Two, I like to be mobile, right? I don't know where I want to put down roots yet. So I'd like to be mobile. I'd like to pick up and leave when my lease is over and find, any place I'd like to live in and test it out before I actually put down roots.
Yeah. Do you find it's cheaper to rent than it would be to actually own a property?
No,
Okay.
not necessarily. Like I said, being a renter affords me about the ability to be mobile.
Right. Okay. So it's
about
really
comparable.
It's really just about not knowing where you want to live and not being
Correct.
tied down. Okay. Well, let's take a look at your numbers and then we'll kind of dive in a little bit deeper here. So if you add up your total rent for both 3 units, the single family, the condo, how much total rent do you bring in every month?
I bring in about just over 18,000 a month.
Okay. Now, if we look at do you have anything paid off, or do you have mortgages?
They are all mortgaged.
All mortgages. Okay. So if you were to add up your mortgage, principal, interest, taxes, and insurance, how much does that come out to every month?
Just over 10,000.
Okay. Now, everybody kind of does repairs a little bit differently, budgeting for vacancy. How do you do that?
Well, the properties that I choose are not rehab properties. They're usually all renovated. And so upon purchasing and doing the inspection, there are usually no issues. So I have about 6 months of reserves in the bank for each property. And then if anything comes up, it's usually something that insurance will cover.
Mm-hmm. Okay. So
Okay.
like
And my
thing.
vacancies are usually very, very low because I have properties in, low vacancy areas.
Okay. All right. So you've got money set aside, and then
Correct.
if something did come up, you would just pull out of that money and then just replenish it.
Correct.
To keep 6 months in there. All right. So you've got like just about 8,000 a month in rental income.
Correct.
Now you mentioned that taxes are a big part of this working, and I think 8,000 a month in rental income is different than 8,000 a month at a W-2.
Correct.
Can you just explain to anyone that doesn't understand, like, how rental income is taxed differently than W-2 income?
Absolutely. So rental income normally is considered passive income. Okay. And because I have rental income, my properties are treated very differently than as if you live in your property. I get to take all sorts of expenses, and including depreciation, which is the main driver for your rentals. Okay. So it kind of offsets all your rental income. And if you are what we call a real estate professional via the IRS rules, you get to offset all other income. That means your activity, as a landlord, as an investor, becomes active instead of passive. So if you are solely relying on your rental income to take care of your expenses, and you're the only person that takes care of your rentals and you're involved materially, you can be considered what we call a real estate professional via IRS laws. And what that does is that allows you to offset all your rental income and any other income that you have. So you go from a passive activity to an active activity.
Okay,
Where
so
normally you would just be able to offset your rental income, you can offset all income.
so the net effect of that is that $8,000 a month, you're not really paying any taxes on that?
Not paying any taxes on it, no.
Wow, that is really awesome. Now, how did you figure this out? I know that the tax stuff can be pretty complicated. How did you figure all this stuff out?
I have 19 years in audit, accounting, and tax, and particularly corporate tax. And so when I first moved out of my unit that I purchased, I did my own taxes, and I started to go through the preparation process and researching being a real estate professional and the rules and how it affected my taxes. I use over the counter software, and I, essentially found that when you do have real estate professional status, all of your income is offset. So I focused on meeting material and active participant rules within the IRS code.
Okay. Now, are you also doing bonus depreciation?
Correct.
Okay.
So you get your depreciation over 27 and a half years. And bonus depreciation, or what some call accelerated depreciation, is where the government says, okay, we know that this is an asset placed in service, so you're now like a business. And we know that there are items within this rental that will have wear and tear that, shorter than 27 and a half years. So we're going to pull those items out and give you an additional expense, right, up front. So you still get your 27 and a half years, but you also get additional expense that you get to front load for your appliances, your wiring, and your flooring, things that will wear and tear before 27 and a half years. And you get it in your first year that your rental is put in use.
Okay.
Yep.
So the key then to keeping the depreciation going is you're going to have to continue to buy properties, right? So you're going to continue to have to buy more rentals to keep that going?
You could. Usually bonus depreciation creates such a huge quote unquote phantom loss. Like we said, depreciation is phantom. It creates such a huge loss. And, if you don't know, you can carry those losses forward, right?
Right.
So you can continue to take that huge loss in that first year and carry it forward until it's all absorbed in your future income generating years.
Okay.
If that makes sense.
Sure. Now, tell me about the properties that you're buying. So you said that your rentals are all rehabbed when you bought them. So are you looking for like more turnkey properties? Is that kind of?
Yeah. So everybody's, model is different. Some people love the rehab process. Some people love to get down to the nitty gritty. I personally do not.
Yeah.
So I look for properties that are already, renovated, and like you say, turnkey. And, I go in with the numbers, and, because I utilize bonus depreciation, I know that those properties will cost a little bit more, but I'll get a little bit more back.
Yeah, and it's easier. Yeah. So you've done like 25% down payments on all of them?
So yeah, when I moved into my condo, that was my primary residence. I put down 10%.
Now, how did you get where did the money come from that you used for the down payment?
So my first down payment was like everybody else. They saved their money from their job.
Yeah.
The second down payment came from my 401k.
Okay.
And, a lot of people have plans where they're allowed to pull for a residential loan or, a hardship. And so I pulled for a residential loan, and I put down my second property because I was living in it. I put down 5%. I had really good credit. And I ended up moving out and making it a full rental after, a year. And for the other two, I put down to 25%, 25%, and then 20%.
Now, with the taking money out of a 401k, you're going to have to pay taxes on that. You've got penalties. Did that concern you at all?
No, because again, bonus depreciation offsets all income when you're a real estate professional. So any tax that liability that you might have when you're a real estate professional is offset.
That's awesome. All right, so basically, you were charged the penalties and the taxes, but because you had all this depreciation, it was basically offset. So it wasn't money coming out of your pocket.
No money coming out of my pocket.
That is really incredible. Now, were you nervous at all that maybe this wasn't a good investment? Now, obviously, it's all worked out, but were you nervous that maybe this wasn't a secure place to put your money?
No, I wasn't. Real estate, people will always need a place to live. That's the one thing people will always need a shelter.
Yeah.
And I've done my research, and I usually choose areas with a low vacancy rate. So, I've always had tenants. I've never had an issue. So, no, I wasn't nervous.
Yeah. Let me ask you about health insurance. Now, most people get health insurance through their job, but since you don't have a job anymore, how are you doing health insurance?
I pay for it separately through a marketplace. Again, it's just me. I don't have children or anything, so it's okay. It's about $427 a month.
Okay. So you just
Mhm.
build that in just as an expense. So that's not a big deal to get
No,
insurance. Now, how long have you been doing this for?
I've been a landlord since 2013.
Okay. Have you had any scary months where maybe a lot of stuff came up all at the same time, or maybe everyone
Oh,
moved out at the same
absolutely.
time? So how did you get through that?
So when the pandemic started, I was afraid I wasn't going to get a tenant, but I did. I got some foreign exchange students, and they had guarantor insurance, renter guarantor insurance. And renter guarantor insurance is like a third party insurance product. It's not related to your homeowner's insurance. It's just basically a company that ensures that if your tenants default on the rent and you gain possession of the unit, that they will pay you out for the term of the lease. And so the tenants that I had a guarantor insurance through the guarantors, and they ended up leaving about, I want to say 7 or 8 months into the lease and going back home. But I was paid out every month because they were still under the guarantor insurance and their lease hadn't expired. So I was covered for the next 8 or 9 months under their insurance. So I received my payments, all the while allowing me to make any repairs to the unit. So I didn't really miss any income. But that was really scary
No.
because, had I not had that, I would have been on the hook for the insurance.
So this is a policy that the tenants had?
Yes.
I've never heard of that before. Like, tell me. So this is like if they were to leave, then
So
their
your
insurance.
tenants default on the rent. Whether they leave or whether they don't leave, they just default. Once you gain possession of the unit, which you may have to evict your tenants, the guarantor insurance pays you out for whatever back rent is owed and any rent left over on the
Huh.
lease every month. So as long as you make a claim for it
So
and you have possession of the unit.
did they have that in place of a security deposit?
No, they had security. So there's a lot of products, but in this case, they gave me the security deposit and they had the renter guarantor insurance.
Okay. And where do you get that from? Like what kind of
Um,
company would sell that?
yes, so the company that I had was the guarantors.
Okay. And how
There's
much
others that have, similar products, only security deposit products. So I use the guarantors, but you have insurance, you have Leap. So, you just have to do your research and make sure that that company covers your area. But the guarantors is live in 49 states. So
wow.
you're likely
Okay.
to be covered.
Yeah, and how much does that cost approximately?
That depends on the tenant, their income, their credit, right, their situation. So they're basically applying, and it depends on the rent. So
Okay.
that would be dependent upon the tenant's application.
As we kind of wrap things up here, let me ask you a question. If somebody is new to rental properties, they're maybe thinking about getting started, is there any advice that you would give them or any words of wisdom that you could give somebody to encourage them to get started?
Yes. You want to do your research. Please find a real estate agent that is knowledgeable in investment properties. Okay. Not just any old real estate agent. A lot of times they just want to sell and get their commission. You want to find somebody who understands cash flow, who understands rentals and the market that they're in. It's very important because, we cannot be all things to all people. When you're learning, you need somebody's help, and it's okay to, enlist the help of a professional. So I have a couple of real estate agents. I send them properties. They do the research. We talk about it, and I kind of have a second eye and ear from an investor's perspective.
That is great advice. Well, if anybody wants to reach out to Natasha, I've got her contact information on the website. Natasha has also taken all the tax information that she's figured out and she's put it all into an online course. If you want to learn more about that, I've got a link to it on the website. You can find it all at rentalincomepodcast.com/episode 368. I'd like to thank today's sponsor for making this episode possible. It's Chaley Ridge from Ridge Lending Group. Chaley is a nationwide lender, and her specialty is helping investors finance rental properties. She has a ton of different loan programs, including her no-doc loan, where she doesn't need pay stubs, bank statements, tax returns. All she needs is a great deal. If you find a great deal, she will give you a 30-year fixed-rate mortgage. Now, the rates are going to be a little bit higher than a traditional full-doc loan, but it's still a great deal. If you want to learn more, just reach out to Chaley at ridgelendinggroup.com. That's RIDGE, lendinggroup.com, NMLS 42056. Thank you so much for checking out the podcast today. Make sure you follow the show. We put out new interviews every single Tuesday, and if you're following the show, you'll get notified as soon as new episodes come out. My name is Dan Lane, and this has been the Rental Income Podcast.